Live option trade alerts. You can join the 7-day trial at beststockstrategy.com/memberships. The 7-day trial is only $19. In this video, you're going to see the exact messages that I sent to my students for July 2021. July 1st, nice opening. Our portfolio was up again. Okay. So we were too early on the PayPal roll yesterday. We left a little money on the table. New opening trade in Amazon, B grade. We sold one of the 2,500 puts, picked up $340 as a spread. I'd sell the 27 and buy the 26. I always like to give the spread option. So if I trade naked, then I'll also give a corresponding spread option, primarily because especially with trades and underlyings that are as large as Amazon, you want to make sure that you provide different choices to people because one naked option of Amazon can use up a tremendous amount of buying power. S&P up 22, VVIX down, or VIX down 2%, and VVIX is up 2%. So yeah, there was a typo there. Amazon down slightly after being down around $25 earlier today. Our portfolio hit a new year-to-date high, July 2nd. S&P up 12, VIX down 6%. It was actually below 15 for the first time in almost a year and a half. VVIX down over 2.5%. Tesla is up over 2%. S&P up 32. VIX and VVIX both down about 2.5%. Earlier today, it was down 6%. Amazon up over 2%. Google, Apple, and Microsoft also up around 2%. Our Airbnb position is closed July 5th. Market was closed because of the holiday. July 6th, sold calls on Amazon. Both the 4,900 and the 4,500 picked up a decent amount of premium. B plus trades. Then I give the spread option. VIX is up around 5%. I like selling some calls during low VIX when everyone is complacent, because during periods like right now, the biggest risk is a large volatility expansion from a sell-off. As a result, selling calls helps offset some of our long bias from selling puts. We have 2 Tesla positions expiring this week and next. Tesla is down around $12, so if it keeps falling, then it may present a good opportunity to sell some puts. Closing trade. The originals are above. If we include the premium that we collected when closing it out, the June 11th, 2620, and rolling it to the July 23rd, then we likely picked up around $2,000 total credit, and we closed out everything for $270. Closing trade in Tesla. We sold the 900 call. Cost basis was $1.59, bought it back for 30 cents. For Tesla, we sold it for almost 160 and bought it back for 30. I'm resending these alerts because it shows me that you may not have received it. I was too early on the Amazon calls, which is fine because we have about $1,000 of safety net. VIX is up over 10%. VIX up 15%, VVIX up 10%, S&P down 9%, VIX up about 9%, and VVIX up about 6%. But volatility was significantly off its high for the day. July 7th, I rolled the Amazon call from 45 to 46, and I financed it by rolling forward the 2500 put to 2620. PayPal is up $5, and this trade is now $18 from being challenged. Thankfully, it expires in 9 days. You can easily manage the call position at 320. Tesla sold a 380 put, picked up $238. S&P up 14. July 8th, S&P was down 54. Closing trade on Tesla. Closed for a large profit. Collected $685 and bought it back for $165. S&P down 37, VIX up 17%, VVIX up almost 7%. Solid opening, S&P up 22. This position expires today for about a $433 profit. New opening trade in Amazon, picked up $243. S&P up 49. July 12th, S&P about even. Volatility up around 3%. New opening trade in Amazon, picked up $350. It's very difficult to trade when volatility is low because I have a tremendous amount of buying power and I feel compelled to put that buying power to work even if there aren't amazing opportunities available. So you see that for Amazon, I'm trading like a high B grade, which is pretty low, or like a B grade. That's pretty much the lowest that I'll ever trade. And if you ask how I grade trades, it's purely subjective in nature. It's based upon my experience. So when I compare, potential opportunity relative to, like historically, the trades that I made, then I would grade this trade in Amazon as like a high B. But I'm not going to trade anything below a B because then it just becomes too risky. And what goes into the rating or the grade? It's really a multifactorial. It's a lot of things. It's like how much premium you're collecting, the VIX at the moment, where the underlying stock is relative to its trading range, if it's the high end of its range, or if I feel that it's oversold. So for example, if the VIX is trading at 35, that means you're going to be able to collect a significant amount of premium. And then if Amazon is trading at the low end of its range, let's say it's trading at 3,200, then in that situation, I could sell like the 2,400 naked put and probably collect around $8. Now, maybe not the 24, but maybe around like the 25. If I sold like the 2,500 put for about 4 to 5 weeks out, and Amazon was trading at about 31 or 3,200, I could probably collect around rather $800 per contract or $8 per share. But here in this situation, even though I'm trading the 2840, I'm only able to collect $3.50. So, all right, with Amazon trade, if the market pulls back, I can easily roll the strike below 2,400. Then I give the spread leg. Mastercard, closing trade, the top one. Bottom one is the original, so about 50% profit, 65% profit rather. New opening trade in Amazon. High B grade, S&P up 15, VIX flat, VVIX down 1. Our portfolio is at a year-to-date high, July 13th. Boeing fell a lot, but I just didn't think it was a good opportunity. There isn't enough premium to justify the trade. It's a high B grade. NVIDIA, closing trade for 17 cents, sold it for 72 cents, bought it back for 17 cents, 75% profit. Rolled up the PayPal call by $5. That wasn't a good trade. I rolled it up by $5, and in exchange for that, I gave $20 on the put side. It was unnecessary, and PayPal did almost get challenged because just this past Friday, right now it's August 1st, but just this past Friday, I think PayPal fell to around 275. So was I concerned that it would fall to 265? No, but that trade was a little bit risky, and I even knew it because I said that it probably was not necessary. I mean, I didn't know because obviously I can't tell the future, but I thought that the trade might be unnecessary. I gave up $20 on the put side, taking $5 on the call side. S&P down 15. Then I said I was not patient enough and made an unnecessary trade. Overall, though, this was a good day. July 14th, sold a put on BlackRock, sold a call on Apple. Both are high B grades. NVIDIA, new opening position, high B. S&P up 5, July 15th. Tesla expires tomorrow for about a $3,000 gain. Amazon, NVIDIA, S&P down 14. In general, during periods of low volatility, it's best to be judicious with your trades because you don't want to trade too large and then have the VIX pop from 16 to 35 in 2 days and then find yourself having to defend all your existing positions. Looking forward to tomorrow. We have the Tesla put position expiring as well for 100% profit. Solid opening. S&P up 13. Then I gave a heads up that we'd make a trade about 15 minutes prior to the market closing. So we sold puts in Amazon and NVIDIA. 2 new opening trades, B+ grade. S&P was down 33. Volatility was up 8.5%. Amazon was down about $57. Here's the Tesla position that expired today for about a $3,000 gain. July 19th, bought back Apple. Closed for a 60% profit. S&P is down around 52. July was pretty volatile. VIX up almost 30%. Sold put in Mastercard. Airbnb, Boeing. Those 2 trades are also solid. Yeah, I mean, Airbnb fell down to 131. I definitely should have sold that that put spread. That was a mistake to not execute that trade. But whatever, there'll be other opportunities. S&P was down 68, VIX up over 20%. So the market was strong heading into the close. I think this is it was down around 94, but closed down only 68. Then the market rebounded. So notice how we waited until the afternoon just to make sure that it wasn't a false rally. Then we closed out Amazon. The originals are above. Collected $536 and just bought it back for $100. I was hoping that the market would pull back an incremental 5 or 10%. Nice opening, July 21st. Closing trade. We rolled the original in by a month for a small credit after making around $2,300 of profit on the original position. So we made, actually, it looks like we made $2,100 net on this position. Made about $2,100 net. Just a heads up, I'll likely make a few trades in 15 minutes. Amazon, I sold the August 27th for $3.05. That's $6.10. S&P up 35. Our portfolio hit another year-to-date high. July 22nd, closing trade. The original is there. Sold for $1.40. Bought it back for 39 cents. Then I sold Amazon calls. Picked up $434 or $2.17 per contract, or rather per share, $217 per contract. Also sold calls on Microsoft. So this is what you have to do when you feel that the market is overbought. You need to sell calls. You really do. When the market's euphoric, you need to fade the rally. It's really important. That's what I do. I mean, I don't know if it's the right thing to do. So obviously, it's not financial advice and you do what you think is best, but I can just tell you what I believe is the right thing to do. Okay, Tesla. This expires this Friday. New opening trade on Tesla. Picked up around $234, $1.17 a share. S&P up 9, volatility down slightly. Usually I don't care about having short delta, except when I feel that the market is overbought and euphoric. This helped us tremendously just a few trading days ago when the market tanked, yet our portfolio barely moved. Yeah, so that was interesting. The day that the market was down 94 intraday and then closed down 68, our portfolio for much of that day, I think we might have actually been up money that day. Were we? Oh yeah, good day for us. We hit a new year-to-date high and also closed out a profit. Yeah, so we made money that day because we're very judicious and we're careful and disciplined, and we also had short delta on. All right, where was I? Okay, here, July 23rd. Bought back Mastercard. Held for a few days and realized over a 50% profit. New opening trade in Amazon. I only did it because I have a ton of buying power. As a spread, I'd sell the 28 and buy the 2740. Sold puts in Tesla. Expiration of August 6th. New opening trade in Facebook. This is a great trade. Very good trade. I mean, I collected almost 20% of the width of the strikes. And then also at this time, I think Facebook was trading around 375 and it hit like a euphoric high. And then it just got pummeled after that. And actually, I did want this trade to get challenged so that way I can roll down the short call to be in the money just so that I could take advantage of any pullback from Facebook. The goal here is that I want this trade to get challenged so that I can roll down the short call. But Facebook has gone up too fast and it's ripe for a pullback. But just in case I'm wrong, then I would buy back the short call and then roll it to be in the money. So that way for every dollar that Facebook would fall, I would then profit while still being protected by the long call. Then, Google was up and then gave my thoughts. If that'd be a decent trade, it would have been a good trade to make. But I didn't make the trade. S&P up 44. Volatility both down 3%. July 26th. Market's about even. New opening trade on Tesla. 820. Closing trade on Amazon. Closed for a 70% profit. Selling 150 puts on Baba is a decent trade, not for me. I'm risk averse. I prefer making money without stress. But it's not a bad trade at all. Baba was down $14. S&P up 10. Volatility is mixed. VIX closed down significantly below its high. Amazon, Tesla, and Google all up over 1%. July 27th. Okay, so I did make a trade on Baba because on July 27th it was down an incremental $10. Or no, actually at this time I remember it was down $8. And I think at its low it was down around $11. But then I think it only closed down around like 5 or 6, if I recall. But I made this trade when Baba was down an incremental $8 or $8.50. New opening trade. And so notice how previously I was targeting the 150 and then I rolled it down to 145. So this was an executed and filled trade. B plus grade, picked up almost $1 of premium. Closing trade on Tesla, bought it back for 29 cents after selling it for 96 cents, held it for less than a day and closed for a 70% profit. S&P is down 23 and the VIX is up over 9%. Then I closed out Tesla on the put side, sold it for $1.22 and bought it back for 36 cents. Amazon, new opening trade, earnings trade. So this trade was funny because after Amazon reported earnings, it was down around $260, $250. But notice how I was very careful. I sold the 3080 put strike. And during earnings, what I like to do is I will be much more careful and much more conservative with my strike selection. But at the same time, I'll also shorten up the expirations so that the option that I choose, the expiration that I choose is right after, like it expires right after the earnings announcement. So in this situation, without earnings, I probably would have had to sell like the 3300 put, and I probably would have had to go like 3 weeks out. But in this situation, because Amazon was reporting earnings, I could sell something with a strike of 3080 and then sell an expiration for like a day or two out, and I was able to collect $104. It's a high B grade, so it still wasn't like a great trade. Then I give the spread leg 3200 by 3100. Then I was too early on that trade. S&P down 20. Amazon, Tesla, Google, and PayPal all down 2%. That's why I mentioned that would have been worthwhile for me to make that Google trade where I would be selling calls. July 28th, Microsoft. Closing trade on top. Sold it for 34, bought it back for 14. About a 60% profit. Spotify is also an opportunity. Mastercard. Earnings trade, new opening trade, low B plus grade. I think at this time, Amazon, or rather Mastercard, was trading in like the low 380s, I believe. And at this time, it was down around like $10. Yeah, because from what I remember, so the reason why I put this trade on was Visa reported earnings before Mastercard. And usually there's a very high correlation between the two. And Mastercard was down anywhere from like $8 to $10. So I figured that, okay, I can still make this trade in Mastercard and take advantage of the high implied volatility rank and the high implied volatility in Mastercard, because Mastercard still had their earnings upcoming, but the risk in Mastercard was significantly less because Visa had already reported and Mastercard had already responded to Visa's earnings. So, that makes a lot of sense when something is extremely highly correlated and Visa reports before Mastercard. Now, granted, once Visa reported, then I'm sure that the implied volatility in Mastercard fell slightly, but there was still an unknown because the Mastercard earnings were still outstanding. So, low B plus grade. As a spread, I sell the 355. The BABA trade is showing almost a 50% profit in one day. If you need buying power, then you're welcome to close it out. Mastercard trade from earlier is now a solid B plus. I should have sold more of it, to be honest. So I think when I sold Mastercard, it was down like $8, and then at its low, it was down around 11. Our portfolio was trading a year-to-date high. Oh, so I did sell more of it. Okay. So Mastercard B plus grade. Closed out BABA. Made about 50% in a day. 50% profit in a day. Facebook is down around 4%. July 29th. Closing trade on Mastercard. Bought it back for 10 cents. Sold it for 50 cents. All right, I better wrap this up because I'm actually outside and it's starting to get very cloudy and I'm pretty sure I'm going to get rained on. Held for less than a day, 80% premium. Sold it for 50 cents and bought it back for, 49 cents, bought it back for 10. PayPal, new opening trade, B plus grade. New opening trade, low B plus grade for Facebook. New opening trade, B plus grade for Facebook. Yeah, Facebook got crushed. I think it was down around $14 at this time. Bought back Mastercard. Bought it back for 13 cents. Sold it for 51 cents. Held for around a day. Then I sold 3 of the 2660s. And my rationale was that in the worst case scenario, I can roll this to about 2400 easily, probably to around 2300 if necessary, without massively expanding the duration on this position. Especially if I sold some calls around it, I could probably roll it down to about 2200. S&P up around 18. Amazon, PayPal, Facebook, Uber, and Shop are underlines to focus on for tomorrow. So sorry, please disregard. I had a phone call with a student who was concerned because at this time Amazon was down around $270, as you can see, because it closed at around $3,600, and then at that time it was trading about $3,330, so it was down around $270. Despite Amazon's enormous drop, we're pretty much even on the day. That's because Amazon move wasn't far outside of the expected move. More importantly, this actually brings up a great opportunity. In an ideal situation, Amazon would trade down to around 3,200, then we would close out our positions about 30 minutes before the market closes. That way, there's no more extrinsic premium left in the position. Then we'd open up new ones that take advantage of today's enormous drop. So this Tesla position expires today. As you can see, it was really stupid for me to roll it up from 315 to 320 and roll up the short put side from 245 to 265. That was really stupid. I got lucky that the position expired worthless, but I got to be more careful about that because I definitely don't want to rely on luck. I want this to be as robotic and systematic and disciplined. Really disciplined is the right word, because I can't tell the future. And anytime someone tries to rely upon specific or like very hard rules that are not flexible or bots or things like that, I think that that's really like a recipe for disaster. We have a bunch of positions expiring today. So stock is down almost 8%, but we're showing a profit. Look at that. So daily gain up $400 for Amazon. I think that's a mistake though, because I remember selling it for like $1 or so. So, oh yeah, what was the cost? Yeah, the cost value was $1.04. So there's no way that that's accurate, but the total gain is accurate though. Tiny profit, but still. The takeaway, as you've seen, is to go extra wide on your strikes during earnings and also shorten your durations, even in the worst case. If Amazon fell 20%, we'd have been able to roll it below 3,000 because there would be very little extrinsic on the option since it expires today. Premium collapsed on Amazon, so I closed it out for 15 cents. Then we made money on the calls. Closed out the call side. Made about $400 on that. Original is here. It's good to keep some short delta when you believe a stock is overbought. Closing trade on Amazon for these positions. Made about $300. Closed it out early because I want to open new trades with a lower strike. So notice how I'm always thinking about the future. How can I best prepare and best situate myself so that I don't have a stressful future? And I noticed that with Amazon down about $250, the $2,840 put strike, it's a little bit too high for me. And I just didn't feel comfortable with it. So I figured, hey, showing me $300, let's just close it out, and then I'll open up new trades with a lower strike. Closing trade on PayPal for 6 cents. Yeah, so as you can see, PayPal got down to around $2.75. Decent profit on the trade. Tesla expires today as well. That's the trade. Okay, closing trade on Facebook. Bought it back for 8 cents. I think we got like 90 cents on it. Yep, 90. So yeah, I should have definitely traded that much larger. Originals above, sold for 90 and bought back for 8 cents. We will make an Amazon trade around 10 minutes before the market closes. And then 10 minutes before the market closes, sold at 2,500 September. I have zero, even if I'm early on this trade, and let's say on Monday, because right now it's August 1st, let's say Amazon's down an extra $300. It's like not a big deal if Amazon falls to 3,000 or 2,700. It's only one contract, and I can roll this down all the way down. I can roll this all the way down to like 21 or even below 2,000 if I really wanted to extend the duration. And even in the worst case scenario, I wouldn't mind taking ownership and owning Amazon at below 2,000, because figure that its 52-week high is over like 3,600. I think it's actually over 3,700. So if I owned it at 1,900, I could just sell covered calls against it, and I can participate in the upside. My only hesitation is that it may fall more on Monday. So on Monday, if it falls more, which is August 2nd on Monday, then I'm going to sell more. But I wanted to get in. I wanted to participate at a small level, only selling one contract. So that way, if the market opens up tomorrow on Monday, then at least I made almost $500 on the trade. Amazon, PayPal, Facebook, Uber, and Shop are underlines to watch. S&P down 24, VIX up around 3%, Amazon down 7.5%. Great day for us. We close out a lot of trades for large profits and hit the year-to-date high. I could have traded Amazon much larger, but I like to wait for Monday to ensure it doesn't drop another 5%. Amazon, PayPal, Facebook, Uber, and Shop are underlines to keep in mind for Monday. Hopefully the market continues to fall, so we'll be presented with some great opportunities. Have a great weekend. And that's it. So let's see how August goes. I hope it's a great month. And I do hope that the market pulls back around 5 or 10%. That would be amazing. But we'll see what happens. We can't tell the future. If you please like, comment, share, and subscribe. And press the notification bell so that way you'll be notified of new videos as they come out. And additionally, you can visit beststockstrategy.com/memberships and enroll in our 7-day trial. It's only $19. Thank you.